So let's start our new topic. Let's start a new topic. And today's topic is one called impairment of assets. Impairment of assets. And that's what we want to cover today for this topic. So, obvious, impairment of assets is the loss in value of an asset. In simple terms, impairment is the loss in value of an asset. Now, how do you as a company test whether your asset has suffered an impairment loss or not? By the end of the year, you may be required to test whether your asset has suffered an impairment loss or not. So to know whether your asset has suffered an impairment loss or not, then as a company, you can compare what we call what we call the carrying amount of that asset. You compare the carrying amount of that asset with an amount we shall be calling recoverable amount. You compare the carrying amount of that asset with its recoverable amount, If the carrying amount of the asset is higher, if the carrying amount of your asset is higher than its recoverable amount, we say that asset has suffered. If the carrying amount of your asset is higher than its recoverable amount, then we say that asset has suffered an impairment loss. Okay? For example, if the carrying amount of your asset is 1 million and you have computed the recoverable amount and you got it as 800,000, then we say that asset has suffered an impairment loss of how much? 200,000. That has suffered a loss of 200,000. Okay? So that 200,000, that loss of 200,000, should be written off against the profit in the profit and loss. Meaning, if you have an asset as a company, whichever asset it is, which now has a book value of 1 million, and now you are writing off that 200,000, then we are saying you credit the asset by 200,000 and you debit the profit and loss account. So that's how we deal with the impairment loss. You write it off by debiting what? By debiting the profit and loss, and you credit the asset by how much? By that 200,000. It may happen that in your company, maybe by the beginning of the year, another asset, whichever the asset, let's call it asset B. That asset had a book value of 100 million in your company. It had a book value of 100 million in your company. Then during the year, maybe as a company, you decided to revalue that asset. Maybe you decided to revalue it upwards by another 20 million. As a company, you must have debited the asset. You must have credited which account? Revaluation. By how much? Another 20 million. So you must have debited asset. You must have credited this account called what? Revaluation. By how much? By 20 million. And you came and said, dear B, which is asset B, that 20 million. Now, suppose by the end of the year, you wanted to know whether your asset could have suffered an impairment loss. Remember, from after you have revalued, your asset now will have a carrying amount of how much? After you have revalued, it means from now onwards, your asset will have a carrying amount of how much? 120 million. Suppose you computed its recoverable amount. And you found that the recoverable amount of your asset is 90 million. Is 90 million. So if the carrying amount of your asset, is that 120 million. That 120 million. So we are asking ourselves, if the carrying amount is 120, but the recoverable amount is 90, has it suffered? Has that asset suffered? Tell me whether it has suffered or not. Of course, it has suffered an impairment loss of how much? How much has it suffered? If you compare those two values, it is obvious it has suffered a loss of how much? 30. Now listen. The question now is, how do you write off the 30 million? It has suffered an impairment loss of 30 million. But the question is, how do you write off the 30 million? How do you write off the 30 million? To write off the 30 million, you don't write it off the way you wrote off the 200,000 that we wrote off initially. No. This time, you write off that 30 million in a particular order. In other words, first, you will consider that 30 million as a revaluation decrease. You first consider the 30 million as a revaluation decrease, meaning to the extent that that asset has a revaluation reserve for that asset, you eliminate that revaluation reserve. An asset cannot suffer at the same time it has a reserve balance. No. So we are saying first you reduce or you eliminate that revaluation reserve. So in other words, you debit the revaluation by that 20 million and you credit the asset B by that 20 million. Once you do that now, once you debit revaluation and you credit the asset by 20 million, I hope now you can see that there is still a balance of the impairment loss. There is still a balance of an impairment loss of how much? The loss was 30. We have said the asset had a revaluation reserve of 20. First, we have said this impairment loss, you first consider it as a revaluation what? As a revaluation decrease. As a revaluation decrease. Once you consider it as a revaluation decrease, by debiting revaluation and crediting the asset, that way you have eliminated the reserve. But remember, the loss was not 20, the loss was how much? 30. So we are saying with that excess of the impairment loss, which is another how much? 10 million, that 10 million now should be considered as a loss in the profit and loss. So you debit P&L and you credit the asset now by how much? By 10 million. So that's how you write off the impairment loss. Listen, that's how you write off the impairment loss of a revalued asset. That's how you write off the impairment loss of a revalued asset. First, you consider the impairment loss as a revaluation decrease. Then any excess of the impairment loss, you consider it as a loss in the profit and loss. As a loss in the profit and loss. So that's all we can say for that. Now, let's now develop the topic. The other point now is, we have said, to know whether an asset has suffered an impairment loss or not, you compare the carrying amount of that asset with its recoverable amount. Of course, you should know that the carrying amount of an asset is the amount at which that asset appears in the books after deducting the accumulated what? Depreciation. The amount at which an asset appears in the books after deducting the accumulated depreciation, that amount is what we call the carrying amount. So the question now is, how do we compute what we call the recoverable amount? How do we compute what we call the recoverable what? Amount of an asset. To compute the recoverable amount of an asset, we normally compare two values. You normally compare two values for the same asset. You compute two values for the same asset. One of the values we shall be computing is what we call the fair value less costs to sell. Fair value less cost to what? To sell. We also refer to that amount as the net realizable. We refer to it as also the net realizable value of an asset. The net realizable value of an asset. The other value we compare with is another value we shall be calling value in use. So for that one particular asset, you will be required to compute these two values. You will be required to compute these two values. One is what we are calling the fair value less cost to sell. The second one is what we are calling value in use. Once you compute those two values, whichever of the two is higher, that which is higher of those two amounts, that is what we consider to become the recoverable amount. That's what we consider to become recoverable amount. So if you are asked to define, which of course some of your past papers do ask you to define, what is recoverable amount? We are saying recoverable amount of an asset is the amount that is considered to be the higher of, number one, fair value less cost to sell. In other words, net realizable value. Number two, value in use. That we are saying recoverable amount is the amount that is considered to be the higher of, number one, fair value less cost to do what? To sell. And number two, we are saying value in use. Okay? That's what we are saying. So that's how we compute the recoverable amount. But then we can go further and ask ourselves, how do we calculate what we call the net realizable value of an asset? How do we compute what we are calling the net realizable value of an asset? To get the net realizable value of an asset, we shall be taking the selling price of that asset. You take the selling price, which is also known as the market value or the fair value, and you minus costs to sell. You minus any cost to do what? To sell. So you take the selling price of that asset, you minus any cost to sell, whatever is the figure you get, that becomes the net realizable value. So in simple, that's how we shall be getting what we are calling the net realizable value. Now, to determine the value in use of that asset, to determine the value in use of an asset, let me first assume that maybe your company is testing the impairment of an asset as at particular date. And as at that particular date, we have seen the carrying amount of that asset is 1 million. So we want to know, as at that date, what is the value in use of that asset? What is the value in use of that asset? Now, to get the value in use of that asset, your company will be required to determine, as they keep using this asset in the future, as they will be using the asset in the future, your company will be required to estimate what are the cash flows that will be generated. What are the cash flows that will be generated from the continuous use of that asset? In other words, you will need to know 1 year from now, how much are we expecting to generate as cash flows from the use of that asset? Second year, third year from now, fourth year from now, fifth year from now, sixth year from now, and so on. So you try and do what we call the projected cash flows. Get those projected cash flows. So you get what we are calling the estimated. Future cash flows. that will be generated from the continuous use of that asset. Get those future cash flows that will be generated from the continuous use of that asset. Once you get those estimated future cash flows, then, now the point is here now, then get the present value of all the estimated future cash flows. So if you get the present value, we are saying, if you get the present value of all the estimated future cash flows, that value you get, which is what we are calling the present value of all the estimated future cash flows, that value is what we shall be calling the value in use of the asset. So we define, listen now, we define value in use of an asset as the value, or it is the present value. In other words, we define value in use as being the present value of all the estimated future cash flows that will be generated from the continuous use of an asset. The present value of all the estimated future cash flows that will be generated from the continuous use of an asset, that is what we call the value in use. So now you know how to get the net realizable value. I hope you remember. We have said to get the net realizable value, we have said you do what? You take the selling price of that asset and you minus what? Any cost to sell. Then number 2, we have said, how do you get the value in use? You get the present value of all the estimated what? Get the present value of all the estimated future cash flows. You get the present value of all the estimated future cash flows. That's what we are saying. Once you do that, that means now you have the value in use, you have the net realizable value. Whichever of the two is higher, that's what you now pick to become the recoverable what? To become the recoverable amount. Okay? So far, I hope we are all together. So from there now, let me ask you a question now. Suppose a company has another asset A, and that asset, it had its net realizable value being 100 million. And the carrying amount of that asset was 120 million. And the value in use of that asset was 130 million. If you are told to compute the impairment loss of that asset, how much has it suffered? We are saying the asset had a carrying amount, a net realizable value. The asset had a net realizable value of how much? Of 100 million, but its carrying amount is 120 million, and its value in use is 130 million. So if you are told compute the impairment loss, utasema, will you say it has suffered how much? Give me the amount. You will say it has suffered how much? What would be your impairment loss now? What would you consider to be the impairment loss of that asset? What will you consider to be the impairment loss of that asset? I'm waiting. How much would you say is the impairment loss of that asset? I hope you are concluding right. I hope you are concluding the right way. And so we are saying, in such a case, first, we have said, to know whether it has suffered, you compute what? You compute the carrying amount. You compare the carrying amount. And in this case, our carrying amount is how much? Is 120 for that asset. Okay? You compare that with what we have called, what? Recoverable amount. You compare that with what we have called the recoverable what? Amount. And tumesema, we have already said, To get the recoverable amount of an asset, you compare which values? You compare the net realizable value with which other value? With the value called value in use. And we have said whichever of the two is what? Higher. Whichever of the two is higher, you pick it to become the recoverable amount. So from this illustration, I can see the carrying amount of the asset is 120, the net realizable value is 100, and the value in use is 130. So if you compare the net realizable value of 100 with the value in use of 130, it means the recoverable amount is how much? The recoverable amount is 130. So has the asset suffered? So if you compare now that it has a carrying amount of 120, but its recoverable amount is 130, has it suffered? The answer is no, that this asset has not suffered any impairment loss. Why? Why has it not suffered? Because we have given the condition as to when an asset is said to have suffered. What is that condition? We have already said for an asset to be said to have suffered an impairment loss, the carrying amount of the asset should be higher than the recoverable amount. We said if the carrying amount of an asset is higher than its recoverable amount, then the asset is said to have suffered. But for this case, our carrying amount is 120, which is less than its recoverable amount, So in such a case, our asset has not suffered any impairment loss. Now we proceed. Suppose I give you another one, asset B. It had a net realizable value, let's say of 180. Let's call it 180 million. Then the carrying amount was maybe an amount of 200 million, but the value in use was 170 million. Has it suffered now? Has it suffered? And if so, by how much? Has it suffered now? I hope you are okay. Confirmed whether it has suffered. I hope you are concluding rightly. Has it suffered? Yes. We have said, compare the carrying amount of that asset, which is how much now? 200. With what? With the recoverable amount. And we have said, the recoverable amount is the amount that is considered to be the higher of value in use and net realizable value. So when you compare the net realizable value with the value in use, I pick whichever of the two is higher, which in our case now is 180. That is 180,000. 180,000. That 180,000 being that 180,000 being our recoverable amount, it means our asset has suffered an impairment loss of how much? 20. And therefore that should be written off. That should be written off. So we are through with how to do that. Now, some of your past paper questions do not give you the value in use of that asset. They don't give you the value in use of the asset. It is normally your responsibility as a student to compute that amount we are calling the value in use. And we have already said, to get the value in use, get the present value of what? Get the present value of what? Of all the estimated what? Future cash flows. We have said, get the present value of all the estimated future what? Cash flows. So I do hope you still remember how you used to compute the present value of future amounts. How you used to compute the present value of those future amounts. Of course, you used to prepare a table. I do hope you remember. You used to prepare a table where you used to have a column for year. I hope you remember. You had to have a column for the cash flows. Okay. You used to have a column for the discount factors and then the present values. Okay. Year 1, year 2, year 3, year 4, whatever it is. Then you are given the cash flows, whatever the cash flows you will be given by the question. Then we are saying to get the present value discount factor, or to get the present value interest factor, or whatever you call it in finance, how do we normally get that amount? What is the formula? To get the present value of a future amount, and I want to get that present value interest factor, what is the formula? What's the formula for getting the discounting factor? You must have done finance, so give me the formula for getting the discounting factor. Of course, we know you take 1 plus r to the power of what? You take 1 plus r to the power of what? To the power of negative n. I hope you remember that. That is important, that you will be taking 1 plus r being the discount rate, you will be told. Then we are saying you multiply 1 plus r, everything to the power of negative what? Negative n. So that's how you will be getting. Once you know the factors now, once you know those factors, multiply the factors by the cash flows, and once you get the present value of all of them, then you get the total. Then you get the total of all the future cash flows. You get the total of all the present values. And that is what you now give you as the value in what? Value in use. So in general, that's how you'll be getting the value in use if the examiner has not given you the value in use, if the examiner has not given you the values in use. So now I want us to do a question from your past papers, which you were tested one time, which your question or your examiner tested you one time in your past papers. So one time the examiner tested you from a past paper question, which I want to share so that we do that question now. It's a question that came in December 2008. So let me share the question now. Let me share that question. I hope you can see it there now. I hope you can see it there now. That is the question that you are given in the year 2008. It was not question number 1, but it was a question that came from this topic. So let me read that question now. It says, number A, IS number 36, impairment of asset, requires firms to periodically carry out impairment review, especially where there is an indication that an asset might be impaired. Then you are told, identify 2 internal and 2 external factors that might indicate an asset is impaired. That is normally a general question that you are being asked. What are some of the circumstances or situations or indicators that might indicate to you as a company that it is time that you test whether your asset has suffered an impairment loss? The accounting standard classifies those indicators as either being internal sources or external sources. For example, anything that happens within your company and makes you as a company feel that it could affect the value of our assets, that which happens within your company, that is what they are calling an internal source. So that is an internal indicator. Anything happening outside of your company, but you feel that which has happened out of your company could affect the value of your asset, that is what we are saying will also be considered or will be considered as an external factor or indicators or factors. So that is something we shall have to come through. When we finish the topic, we shall have to discuss those points. But it's a general question that even if you have not been taught, you should be able to come up with some indicators that might indicate to your company it's time you test whether your assets have suffered an impairment loss or not. So those indicators, either they are internal indicators or external indicators that might take place either within your company or out of your company. They could have taken place, but maybe your asset still has not suffered. But we are saying test. They are those indicators that might indicate to you that it's time you test whether your asset could have suffered an impairment loss. So we shall finish with that note. We shall finish with that area. Otherwise, for now, I want us to do part B of that question. And number B said that ABC Limited owns a manufacturing plant with a carrying value of 7,490,000. Then you are told the company, the government has just imposed export quotas on the products manufactured by the plant. Following this development, ABC Limited has prepared the following cash flows from the usage of the plant for over the next 5 years. So you're given the cash flows of year 1, year 2, year 3, year 4. You can see the figures are in thousands. You can see the figures are in thousands. Then additional information number 1, you are told the plant could be sold currently for 5.6 million. The selling cost would amount to 100,000. Number 2, you are told the cost of capital is 15%. The cost of capital is 15%. Number 3, the present value factors are, you are given one column you are given for 15%, and the other column is for 10.5%. It's obvious this question wants you to know which of those two discount factors will I use. Will I use the ones at 10.5 or will I use the ones of 15%? We are given the cost of capital as 15%, so it's obvious you would use the ones of 15%. But I've said some questions don't give you those factors. At least this question has given you those factors. So let's go on. After that, they are telling you to required. They are saying calculate what we call the recoverable amount of the plant. That's number 1. Number 2, impairment loss, if any, on the plant. Impairment loss, if any, of the plant. So that's what I want us to do now. Okay. So let's now do the calculation. We said we shall compare what? We said we shall compare the carrying amount of what? Of that asset, which we were given like 7 million and something. We shall check. And we shall also compare that with what we call the recoverable amount. And we have said to get the recoverable amount, what do we do? To get the recoverable amount, we compare which two values? We have already said you compare one value called net realizable what? Value. And number 2, you compare it with what we call value in use of that plant. Whichever of the two is higher, we have said whichever of the two is higher, that's what you pick to become the recoverable what? To become the recoverable amount. So for this question, we need to compute what is the net realizable value of the plant. The examiner did not give us. So let's compute it. So we come and say a net realizable what? Value. Net realizable value. We said it is selling price minus what? Minus cost to sell. Minus cost to sell. If you remember, we were told by the question somewhere, by note number 1, if you are there, by note number 1, we were told the plant could be currently sold for 5.6 million. Are you there? It could be sold for 5.6 million and the selling cost would amount to 100 what? Thousand. The selling cost would amount to 100,000. So let's get now, if the selling price is 5.6 million, but to realize this 5.6 million, it will cost you how much? To realize this 5.6 million, it will cost you 100,000. It will cost you 100,000. And therefore we are saying the net realizable value of this plant is now how much? 5.5. That is now 5.5. So now I know the net realizable value of our plant. It's 5.5. So we need to determine the second value, which we are calling what? Value in use. We need to compute the second value, which we are calling value in use. So put down this, same IV, put down this determination, put down this now, same somewhere, put down this way, determination of the value in use, determination of the value in use of the plant. Put down that statement. Then to get it, we have already said you will need the table. You need a column for the year. You need a column of the cash flows. You need a column of the discount factors. You need a column of the present values. So this question gave us 5 years. You remember year 1, year 2, year 3, year 4, and year 5. So let's go and pick the cash flows now. Let's go and pick the cash flows from the question. We were told by the first one that we expect a cash flow of 2.3 million. 2.3 million, then 2110. Let's pick those two first. 23, that is 2,300,000. And the other one was 2110. The third one, let's check the third one. The third one, we were given 1570 and 1040. 1570 and 1040. That is 1570 and 1040. Finally, the last one was how much? The last one was 2330. 2330. We have to now get the discount factors we have been given, but you should be able to confirm whether they are right. We should be able to confirm, but we have said it's 1 plus R. We have said it is 1 plus R, everything to the power of negative what? Negative N. So we are saying, if they had not given you, how do you confirm? How do you confirm? In this question, we were given our discount rate as 15%. So let me see whether they are right. So if our rate is 15%, that is the cost of capital. It will be 1.15 to the power of negative 1. To the power of negative 1. From my workings, I am getting something like 0 or 86.96. Let's see whether it's the same. The first one is what they are giving me. I hope you can see it there. They are giving me, according to this, 86.96. That's correct, 96. Okay. So let's put it as it is in their question 086. That is 86.96. So now we can pick the others. From the other one, they are giving me 50, 75, 61. So put it 75, 61. The other one, they are giving me what? Put how much? The other one, they are giving me, let me pick the other one. The other one, they are giving me 65, 72. 65, 72. 65, 72. After that, we are picking the fourth one, sorry. We are picking the fourth one, and the fourth one was given as 57 what? 57, 15, 17. 57, 17. 57, 17. Then finally, I picked the last one. 49, 72. 49, 72. From there now we get the value in use now, or we get the present value. So let's multiply these figures now. So I take that 2.3 million. I multiply that by 96. Confirm my figures. I am getting something like 2,080,000. 2,080,000. You'll confirm my figures. 2,080,000. Okay. That is 2,080,000. That's what I'm getting. That's all for the first one. I do the second one. The second one we are given is 21. Be working also. 2110. Multiply that by 75. 61. Multiply that by 75, 61. I am getting an amount of 1,500,000. 1,500,000. 595. 371. 371. I hope you're also getting the same. Confirm. Then after that we go to the third one. 1570. I multiply that by 65. 72. And I'm getting something like 1,031,804. 804. I hope you are getting that. We go to the fourth one. We are taking 1040. Multiply that by 57. 57, 17. I am getting something like 594, 568. Okay, 568. Finally, we take 2330, sorry. Multiply that by 4972. I am getting an amount of 1,100,000, 1,115,000. No. I'm getting 1,158,000. 158. 1,158,000. 476. 476. Now somebody will give us the totals now. So get me the total. Get me the total. Add all those present values. Let me add and you also be adding. Be adding also. I'm also adding. Get the present value, all of them. Okay, you'll confirm my figures. I'm getting 6,380,000. 299. So get that. I'm getting 6,380,299. Okay. So that's what we are calling value in what? Value in use. Value in use. So now we know the value in use. Now we know the recoverable amount. What was the recoverable amount? We computed, the net realizable, we computed the net realizable value. You can see it up there. We have it there. I hope you are seeing it there. I hope you are seeing that is what we were calling the value in, the net realizable value. We have computed the value in use to be 6 million. So you know, and we have said this, to get the recoverable amount, you compare the two and you pick whichever is what? Is higher. Whichever of the two is higher. So what I want you to do, put down this statement. Put down this statement, comparing the net realizable value of the plant. Comparing the net realizable value of the plant, shillings 5.5 million with comparing the net realizable value of the plant, shillings 5.5 million with its value in use, shillings 6,380,299. 6,380,299, therefore, the recoverable amount of the plant, becomes shillings 6 million, what? 6 million and what? 6,380,299. So that is what we are considering now to be what? To be the recoverable amount. So we are through with part A of that question. Let's go back to the question. Number A told you, I hope you can see it there. Number A told you, compute the recoverable amount of the plant, which we are through. We were told to compute the recoverable amount of the plant, which we are now through. We have computed the value in use as 6.3 million. We have computed the net realizable value as 5.5 million. Whichever of the two is higher, that's what you pick to become the recoverable amount. And now we can see our plant has a recoverable amount of 6.3 million. 6,380,299. I hope that has been understood so far. Now we want to go to part 2 of the question. Part 2 told you, compute the impairment loss, if any. So do you think it has suffered? Do you think our plant has suffered an impairment loss? Do you think our plant has suffered an impairment loss? Remember, we were told at the start of the question, if you remember, we were told at the start of the question up there that the carrying amount of the plant was 7,490,000. Now we have computed its recoverable amount and we have got an amount of 6,380,299. So has it suffered? Yes. So we are saying that means it has suffered. So we are answering number 2. We are answering number 2 of the question now. We are answering question 2 now. Question 2. We are seeing the carrying amount of the plant is 7,490,000. We have seen the recoverable amount of the plant is 6,380,000. 380,299. So the question is, has it suffered? The answer is yes. The answer is yes. And so let's compute now its recoverable amount. So andika somewhere, put down this. You could say, that is how you could put it. You could say, comparing, you can say this, comparing the carrying amount of the plant, shilling 7,490,000, with its recoverable amount, shilling 6,380,299, then the plant has suffered an impairment loss of the following amount. The plant has suffered an impairment loss of the following amount. Then you write there is equals to 7,490,000 minus 6,380,299. What are you getting? Get the value. How much are you getting as the impairment loss? So let me calculate, as you are also calculating, 7,490,000. You minus 6,380,299. I'm getting a value of 1,109,701. Are you getting the same? Are you getting the same? So we are saying, when you compare, we have compared, I hope you are following, we have compared the carrying amount, which is 7.4, we have compared with the recoverable amount, which is 6.3. Then we are seeing it has suffered an impairment loss, and we have said, now that it has suffered an impairment loss, you compute it. We have taken 7,490,000, we have subtracted 6,380,299. So that is it. So we are through with that question now. We are through with that question. So now I want to develop the topic slightly. now. So let me develop the topic now. So far, I hope you know how to compute that now, the impairment loss. Another company, another company had one of its assets, one asset in the books called asset A. It had a carrying amount of 200 million. That asset had its carrying amount of 200 million. This company wants to know whether their asset could have suffered an impairment loss. And we have already said, to know whether this asset has suffered an impairment loss, you compare the carrying amount of that asset with an amount we call what? Recoverable amount. We have also said, how do we get recoverable amount of an asset? We have said, to get the recoverable amount of an asset, we compare what? We have said, you compare the what? We have said, you compare what? You compare the net realizable value with another value we call what? Value in use. Now listen. To get the value in use, we have already said, I hope you are following. To get the value in use, we have already said, to get that value in use, to get the value in use, you get the present value. Get the present value of what? Of the estimated future cash flows. Now listen. Suppose this asset A cannot generate cash flows. No cash flows. If this asset on its own, it can't generate cash flows. Yet as a company, you want to know whether your asset has suffered an impairment loss or not. But now the limitation is, this asset cannot generate its own cash flows. It cannot generate its own cash flows. So the question is, what do you do? This asset on its own, it can't generate cash flows. And as a company, we want to know whether it has suffered an impairment loss or not. What do you do? Now listen. So what your company will do is this. They would ask themselves, suppose we put this asset A in a group of other assets. Let's call that other asset maybe B, which could be having a carrying amount of 200 million again. Then they ask themselves, can that group now, as a group, can it generate their own cash flow? As a group, can they generate their own cash flow? Maybe the answer is no. Then they ask themselves, what if we include now another asset? Let's include another asset. We call it asset number C, maybe as 100 million. So they would find out, as a group of 3 assets now, maybe as a group of 3 assets, can they generate cash flows as a group? Listen, if as a group of assets, this group of assets can generate cash flows. Listen, if this group of assets, the group that comprises asset A, B, and C, if the group of assets can now generate cash flows, listen, if the group now can generate cash flows, that group of asset, we normally call it a cash generating unit. A cash generating unit. Let's see now. I have said, this company wanted to know whether asset A, not B, but A, whether it has suffered an impairment loss. They saw it has a carrying amount of 200 million. But they could not be able to determine the recoverable amount of that asset. Why? Because on its own, that asset cannot generate cash flows. That asset cannot generate its own independent cash flows. Yet your company wants to know whether the asset has suffered an impairment loss. So what do? They decided to put asset A in a group of assets, whereby now, as a group of assets, they could generate cash flows. So we are seeing that if they put asset A in a group of assets like B and C, now that group of assets is able to generate cash flows. That group of assets is what we are calling a cash generating unit. Now listen. So this company decided to put asset A in a group of 2 other assets. We are not saying that they would put it in a group of all the other assets of the company. No. What they would try to do is to identify, the smallest group of assets, whereby if they put asset A in that group of assets will generate cash flows. That group of assets is what we are now calling a cash generating unit. Now listen. So I am introducing now a concept of what we call a cash generating unit. That's the subtopic I'm trying to introduce now. And so, this time, having you identified a cash generating unit, which now has 3 assets, to know now, to know whether your unit has suffered an impairment loss or not, you compute now the carrying amount of your unit. Your unit now has a carrying amount of how much? 200 for asset A, 200 for B, and 100 for C. Now it has a carrying amount of 500 million. Because the unit now can generate cash flows on its own, now compute its recoverable amount the usual way. Compare the carrying amount or compare the net realizable with the value in use. Get whichever of the two is higher, get what we call recoverable amount. So suppose you computed the recoverable amount of your unit and you got it as 350 million. So has the unit suffered? Has your unit suffered? The answer is yes. The unit has a carrying amount of 500 million. It has a recoverable amount of 350. So the unit has suffered an impairment loss of 150 million. Okay? The unit has suffered an impairment loss of 150 million. So that means we come and now say, this company now, this asset A, remember the aim was to know whether asset A has suffered. So now you come and say, because the unit has suffered, even asset A has suffered an impairment loss. Okay? Now, once you know that, the other question is, this unit having suffered an impairment loss of 150, how do we write off the impairment loss of that 150? Listen now, the accounting standard says that to write off that 150 should be written off against the assets in the unit, should be written off against the assets in the unit on the basis. Get the point now? The 150 should be written off against the assets in the unit on the basis of their carrying amount. On the basis of their carrying amount. Meaning, against asset A, which has a carrying amount of 200, divide that by 500, now multiply that by 150. That will give you how much write-off against asset A. That will give you how much write-off against asset A. B, the same. B has a carrying amount of 200. Divide by the carrying amount of the unit, 500. Multiply that by 150. That's how much you write off against B. Against C, which has a carrying amount of 100, it will be 100. You divide that by 500 again. You multiply that by 150. You multiply that by 150. So that's how we allocate. Listen, that's how we allocate the impairment loss off. That's how we allocate the impairment loss of a cash generating unit. That's how we allocate the impairment loss of a cash generating unit. How? We have said that if a cash generating unit suffers an impairment loss, listen, if a cash generating unit suffers an impairment loss, that impairment loss should be written off against the assets in the unit. How? On the basis of their carrying amount. On the basis of their carrying amount. Fine. Now, still on the unit. Suppose, now listen, suppose one of the assets in the unit, I'm developing the topic now. Suppose one of the assets in the unit, let's assume asset C. That asset C, let us assume it was an asset called goodwill. One of your assets in the unit, suppose it was an asset called goodwill. Listen. Still, you computed. The carrying amount of the unit still remains 500. You calculated the recoverable amount. You got it 350. Then you realize the unit has suffered an impairment loss of 150. That's okay. But then the question now is, how do we allocate? Now listen, how do we allocate that 150 to the assets in the unit? Where one of the assets in the unit is an asset called goodwill. Now listen, IAS number 36, that is the accounting standard, says that if a cash generating unit, to which goodwill belongs, listen, if a cash generating unit to which goodwill belongs suffers an impairment loss, then that impairment loss should be written off in a particular what? In a particular order. That impairment loss should be written off in a particular order. What is that order? First, number one, first you write off the carrying amount of any goodwill. First you write off the carrying amount of any goodwill. You cannot say the unit has suffered at the same time it has goodwill. No. So we are saying first write off the carrying amount of any goodwill. Once you do that, like in this case, out of the 150 million impairment, you minus that loss, that in goodwill of 100. That will now leave you with a good balance of 50 million. That will now leave you with a balance of 50 million. Follow now. Once you are left with 50 million, remember you have two other assets in the unit. That is asset A and B. That 50 million, listen now, that 50 million should now be the one to be allocated between the other assets, in the unit, again now on the basis of their carrying amount, meaning against asset A, it will be 200 divided by what now? It will be 200 divided by how much? It will be 200 divided now by 400. Mark Q, divide by 400. Why? Because the impairment loss was 150. You eliminated goodwill of 100. So you remain with two other assets, which had a carrying amount of 200. Another one had a carrying amount of 200. So you are remaining with only two other assets whose total carrying amount is 400. So you against A, it will be 200 times divided by 400 times what? Times now how much? Times 50. Times 50. Sawa? That's against asset A. B, again, you do the same. Against B, you do the same. It has a carrying amount of how much? 200 million. What is the carrying amount of the other assets? Is 400 million. What was the balance of the impairment loss? The balance of the impairment loss was 50 after writing off the goodwill. That's how you write off the impairment. So I hope you have understood how to deal with what we are calling, listen, how to deal with what we are calling a cash generating unit. How to deal with what we are calling a cash generating unit. We have said what? First, we defined what is a cash generating unit. We have said a cash generating unit is the smallest group of identifiable assets. It is the smallest group of identifiable assets which can generate cash flows on its own. A cash generating unit is the smallest group of identifiable assets which can generate cash flows on its own. That is it. Then from there, we have said, how do you test whether a cash generating unit has suffered an impairment loss? We have said, still compare the carrying amount of the unit with the recoverable amount of that unit. Then we have said, if the unit has suffered an impairment loss, first you need to check, do we have goodwill in that unit? If the unit does not have goodwill, listen, if the unit does not have goodwill, then the impairment loss should be allocated to the assets in the unit on the basis of their what? Their carrying amount. So initially, you remember we had asset A, B, and C. We had asset A, B, and C. All of them were pure assets without goodwill. So against A, we took 200 divided by 500. We multiplied by 150. I hope you remember. Then we also took, for asset B, we took another 200 divided by 500 times 150, the total impairment. Against C, it was 100 divided by 500 times 150. That is where the unit did not have any what? Any what? Goodwill. Good. Then from there, we now say, what if one of the assets in the unit, what if one of the assets in the unit is an asset called goodwill? Is an asset called goodwill. We have said, if one of the assets in the unit is an asset called goodwill, then, and if the unit has suffered an impairment loss, then we have said that impairment loss should be written off in a particular what? Order. First, what do you do? First, we have said, write off the carrying amount of what? Of any goodwill. Write off or eliminate. First, write off or eliminate the carrying amount of any goodwill. Once you do that, then now the balance of the impairment loss should be allocated to the other assets in the unit, should be allocated to the other assets in the unit on the basis of their what? On the basis of their carrying amount. On the basis of their carrying amount. So that's what we have to say for now. So for now, I am through with what we do when you are testing for impairment of a cash generating unit, of a cash generating unit. So I want to stop there for now. Next lesson, we shall now do an example from your past papers. We shall now do an example from your past papers on how to test the impairment loss of a cash generating unit. That is what we shall do in our next lesson. Then, of course, in our next lesson, we shall also finish that small topic. It's a small topic. We shall also finish it by doing what we called the indicators. You remember I started by looking and asking from the past paper. The first one we did, there was a question that was asking you, what are the indicators? What are the indicators that might indicate to you an asset might have suffered an impairment loss? So that is what we shall also do next time as we come to the end of that small topic. So maybe for now, we stop there. That is for now. Maybe we stop there unless there is a comment. That is what we can now say. That is all for now. Maybe that's all for now. So see you in the next lesson. See you in the next lesson, where now we shall cover the calculation of the cash generating unit, impairment, and then we look at the factors that indicate that an asset might be impaired. So see you next lesson.